The 2024 Indian general election has started, and it will take a while to know the winner. In this short video, I will focus on the economy and basically ask the question how Modi's government performed. Modi has been in power since 2014, so that's quite a long period of time. In this 10-year period, lots has changed in the Indian economy. In this session, I will focus on a very descriptive perspective, so I don't go into any hardcore modeling. I might do this in other videos. Just please leave a comment below if you want to explore other questions. So we will focus on the following aspects. Did the economy expand? Here, of course, there are various ways to measure it. We can look at gross domestic product. It's quite sensible to do this per capita, given also the change in population. We should consider adjustments for inflation. We should also consider a purchasing power parity, which matters in particular in the Indian context because services are a big part of the economy. Then we can also look at relative strength. So we can look at India's share of the world economy. So this is more about relative performance. Now this is really interesting, and you will see this in a minute in action. Then I will ask, is inflation under control? Of course, people that visit India will notice that inflation is still an issue, but do we see any stabilization in this period? Inflation is an issue, in particular when it comes to elections. It seems to be a very strong predictor. So usually economic growth is a good predictor, but also inflation and unemployment. Unemployment is a bit tricky to measure in the Indian context because there's lots of informal labor. So it's quite difficult to really establish exactly how unemployment figures have changed. Finally, I ask, has debt increased? So here the focus will be on government debt. Of course, in India you have a central government and you also have all the different states, so things are a little bit more complicated. I will be using figures provided by the IMF World Economic Outlook database. You can download the data yourself, and I also encourage you to do your own analysis, because end of the day it's about data, not feelings. So don't trust the stuff you read online. Have a look at the data yourself. You will find also a link in the description to my GitHub repository. You get here all the code I use, and if there's anything else you would like to discuss, just leave a comment below. I will be using Stata to do the analysis. The Stata do file, which replicates what we do today, is again available on my GitHub. If you want to go deeper into Stata and data analysis, you find plenty of playlists on my YouTube channel, so check that out. So the first thing I do is I open my data set in Stata. You can download the data as an Excel file. You can convert an Excel file into a Stata file. I explain all of that in a lot of detail in various videos. If you really want to go deep into it, I have 2 Udemy courses which go deep into Stata and getting started in data analysis as well as applied time series modeling. Again, the link is down below in the description. The first thing I will do is, which is a good idea, I will add some data labels, because otherwise you don't know what these different variables mean. So let me just run this part and open the data, and if we do BR for browsing the data, we now see our data structure. So we have years starting in 1980. We have our GDP per capita measure. This is in constant prices, a purchasing power parity measure, the share of world GDP, inflation, import-export growth. I really won't cover this in this video. Population. And we have the debt relative to GDP starting in 91. So that gives us a good, I would say, idea about economic performance. There's a lot more to discuss about productivity and so on and so on. Happy to do this in other sessions. Of course, also you can talk about the great performance of the stock market. Of course, recently it has been a little bit more bumpy. Note that the data from 2023 onwards, these are forecasts. So the IMF always does some forecasting. So be careful with these forecasts. I would not necessarily rely on them too much. In particular, when it comes to forecasting debt levels, there's a tendency to assume that things stabilize. But, well, we have to be a bit skeptical here. So after you load your data, if you type in des for describe, you see now the structure of your data set. So we have our GDP, time series, inflation, import, export, population, and debt, but we don't have any data labels. So the first thing I always do is I just write down using the label var command what these different variables really mean. And then I use tset to define my time dimension. So that will tell Stata that we have time series data. So if you run this, if we do describe again, you now have all the data labels, so we know what these different things mean. That's a good idea because I tell you after some time you will forget. So always make sure you document whatever you do. Next, we look at economic growth, and I just, keep it very simple in this video. I only do some descriptives. I don't do any modeling. There's a lot you can do with it, and there's a lot more data you can explore. Again, if you have any questions, just leave a comment below, and I'm happy to explore that further. So just start with a very simple line chart looking at GDP per capita in purchasing power parity over time. Now, usually with GDP data, you would expect a similar pattern. So you tend to get what you call an exponential growth. So there's a tendency that countries grow in the long term around a long-term trend of maybe 3-4%. Now, this, of course, is inflation adjusted, so in constant prices. It considers also purchasing power parity. So this gives you a more or less cleanish perspective on how the economy is doing for one average person. Of course, the issue here is who is the average. Average doesn't mean much. Yeah, so you can put your hands in fire, your feet in ice. On average, you're fine. So the average doesn't tell you anything about inequality and other issues. Of course, we have to be aware of that. But in general, you see, of course, a positive development, and then 2020 happened, so that's the impact of COVID lockdowns, and a sharp drop in GDP per capita. So this is of course expected, but after that you see that growth continues. So usually when you deal with exponential growth, a good idea is to take the log. So you do a log transformation. I talk about this in quite a few videos. And in a log transformed chart, if you see a straight line, it means we have exponential growth. So that's the idea behind it. So we do here the log scale. You can just use the option Y scale log, which does it for you. That's the easiest way of achieving that. And you see pretty much a straight line up to COVID, and then the straight line continues. So put differently, when you look at the slope of this curve, it looks very, very similar. So you have more or less the same long-term trend growth before and after COVID, but of course COVID is a major sharp disruption. But basically, you can argue that, well, in terms of GDP per capita, the economy expanded, but of course, the economy also expanded before. There are always some bumps on the road, but in general, this is following a long-term trend. The next thing which is interesting is to look at the relative strength. Now, this is India's share of world GDP. So this tells you a lot more because this is about relative performance. So do you see India emerging as a powerhouse in this period? Now, I also added here a few lines. So these are vertical lines to indicate the start of Modi's government in 2014 and the current point in time. Well, this is when the projections start because this is more precise. I added here a line color option. Saffron was not available. This is the closest I can get. So here we go, and here we are. So now you have the GDP. Again, this is purchasing power parity adjusted compared to the world level. So you see that relative to all the other countries, India is getting stronger in this period. And of course, here you have a significant dip. And also relative, now you can actually make a relative assessment. COVID was bad for India in relative terms because other countries boosted a lot more the economy in this period. In particular, the US has done this. The US spent a huge amount of money, I think way too much money, to actually compensate for the impact of COVID. India didn't have really the financial resources, but still you will see in a minute debt levels increased substantially. But arguably what you can say is in this period, India's share compared to all the other countries has increased. So India is getting a lot more strong in this period. So there's no doubt about this. So in summary, the economy has done quite well, but you see that to a large extent it follows a long-term trend. So this is still quite an achievement because the Indian economy is a lot more mature than it was 30, 40 years ago. So maintaining these growth rates at a higher level of development is actually difficult. See China. It becomes increasingly difficult. So it is actually quite an achievement. One has to be honest here. Now, when it comes to inflation, inflation has been a long-term issue. So that's inflation. Again, you see it looks as if it's exponential growth. So that again points to a kind of a long-term inflation rate in percentage points, which seems to be kind of more or less constant, but it seems to be a little bit more wobbly here. So again, it's a good idea to do the log adjustment. So I do that. So if you see a straight line, it means I have a constant inflation rate. I put in the lines for Modi's government, so you see better actually what the impact is. And what you notice is the following. You have different regimes, if you like. So there is a very high inflation period in the first part. You see the slope is very, very steep, and then it flattens. So here from about the late 90s, it gets a lot more stable. And also recently, it seems to stabilize even a tiny bit more. So inflation still an issue, but a lot better than it was before, and I think that's a fair assessment. Now finally we look at debt. Debt is relative to GDP, so that is quite a sensible measure. You have to look at the size of the economy because end of the day this is how you can generate income for the state. The main issue in India is not necessarily government spending. It's not that massive. So also when you look at stuff like health spending and so on, it's not massive. And also people always talk about the expansion of defense spending. When you look at the data, it's not really that true, honestly speaking, compared to GDP. But looking at a GDP measure is the most sensible way to do it. Again, I add in the lines, and I also add here a special red line for COVID because that's the big impact here. And I use the if qualifier to start in the year 91. We don't have any data for the earlier period. So if we look at that, you see it's coming in waves. And again, this is very, very typical. If you look at other countries, this is a very common pattern. So that countries kind of oscillate between higher levels of debt compared to GDP and lower levels. Now it's hard to tell what's a sustainable level. We can do a whole other video on sustainable levels of debt because it depends on many, many factors. And of course, this is always a one-sided game here because we don't look at the assets. Yeah, we don't look at the assets owned by the state compared to GDP, and this can be quite substantial. So one needs to be a lot more careful when we want to talk about sustainability. So here I just want to highlight a few points. Number one, obviously COVID had a massive, massive impact, no doubt about it. But also you see a sharp recovery after the lockdowns, which is quite important. The forecast suggests it's improving further, but of course one has to be careful with forecasts. You also see, and this is also important to note, that prior to COVID, debt levels have increased. Now, is that a problem? Well, that has different pros and cons. In the pre-COVID period, you had quite a modest level of interest. So it was quite cheap to get access to funding. So sometimes, spending money, investing it is not a stupid idea. You can actually enhance long-term economic performance. So in summary, are these levels of debt unsustainable? Historically, most likely they're high, but don't look like it. And also you see already a sharp correction here, so I wouldn't be too concerned. But yes, there is an increase in debt. So in summary, when you look at the data, and please explore this yourself, it's quite obvious that economically speaking, Modi's government actually has been quite successful. Again, we can look at other measures. When you look at stuff like foreign direct investment, inflows of investment, and so on, many people claim there has been a seismic shift, but actually the data is not really that strong. Again, if you have any questions, comments, just please leave a message below, and I try to get back to you. So hope you enjoyed that. Please leave a little like and share this content with other people that might benefit or people you would like to annoy. And I see you in the next one.